Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, as always, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. And it's going to be an important day, right? You have the RBI policy and you're heading into a long weekend as well. So you don't know which way things are going to go. Global markets, most of the global markets are also shut for the Easter weekend. So it's going to be a thin couple of days.
Nigel knows exactly where we're going. We're going into the long weekend.
We're going to the long weekend. It's a Holy Week that kicks off today, you know, from a Christian perspective. So volumes will be lower from the Western world in particular, since today is Maundy Thursday, and then tomorrow global markets everywhere are shut for Good Friday. So good weekend coming up. We get through today. Hopefully the RBI governor doesn't disappoint.
And all the Easter eggs and the Easter hunt.
That's due next week.
On Sunday.
No, next week we'll have it in the office.
Okay,
nice.
Waiting for that.
Looking forward. Well, let's just quickly run you through what you need to watch out for as we kickstart another session. So markets have once again, and this week actually has been pretty much similar. Data in the US has disappointed. And, you know, yesterday I asked the question whether bad news is bad, which is bad data is bad, or is bad data still good? I think markets are now undergoing, I don't want to call it a regime change because it's just a few days, but markets are starting to treat bad data as bad outcomes as well for markets. You know, you saw more of that last night. ADP, the private payrolls data disappointed. You had the, which was subpar. ISM services number, which also came in below expectations. I mean, actually, some are saying that the ISM services number is screaming recession, at least recession in the future out there in the US. But at least a slowdown is what all of data that we have from the US has showed over the last many trading sessions now. By the way, the S&P was down 0.25%, the Nasdaq was down 1%, but both these indices came off the low. So these are not the low point of the day. The market substantially recovered, but we were still down, and tech lost more than what the other non-tech stocks did. The 10-year is now down to 3.3%. It's a fresh year-to-date low, and how fast markets kind of undergo these change in perception about what the Fed will do, etc. So it's a new low, and watch for a weekly close. We will not be trading tomorrow, but watch for a weekly close on the US 10-year below 3.32. It's an important technical level, and if we close below that level, it opens downsides towards the July 2022 low, which was 2.51%. I mean, you know, you're talking about some serious correction, which has already happened, and of course, which perhaps may happen if some of these technical levels give way. The big daddy of data, of course, is the US jobs data, the official jobs data, non-farm payrolls, which we will get tomorrow, right around US market open time. And we'll, of course, have to kind of react cumulative to all of it when we come back on Monday. But that's the big one. If it reinforces what other data this week has shown, I think the markets may continue to move in the similar kind of direction, which is, you know, rates, yields continue to sell off. And for equities, it's a debatable kind of picture, right? Because, you know, it basically means that the Fed will not have to do very much more. At the same time, it'll have to kind of deal with maybe, you know, slowdown in the rate of growth of profits, basically a recession for profits as well. Now, today, here we have the RBI decision, a 25 basis point hike, I think is what many are expecting. Although there is a fair bit of debate in terms of whether there will be a change in stance. You know, they've been at withdrawal of accommodation. Will they go to neutral? Many believe it's not the case, not right now. Yesterday, we had a pretty spectacular day. It was up and up through the course of the day. The Nifty ending above the 200-day moving average. That's like the Lakshman Rekha between, you know, the bullish zone and bearish zone. Long-term moving average, important. On the way up, there are multiple resistances between 17,573 and 17,615. Let me just explain what these two numbers are. 17,572 is the upper end of the gap, which I've been highlighting for the last couple of days, and 17,615 is the 38% retracement, Fibonacci retracement of the entire fall from the all-time high to the low that we saw recently. That number is 17,615. These are near-term sort of resistance levels you need to keep in mind. You know, for the Bank Nifty, the immediate resistance stands at 41,208 and 41,382. Now, 41,208 is the upper end of the gap, like for the Nifty, and 41,382 is the 50% retracement of the full fall that index has seen. Bank Nifty has done a little better as compared to the Nifty. So while on the Nifty, we are eyeing the 38% retracement, for the Bank Nifty, the retracement is 50%. And in case of pullbacks, I think for both the Nifty and the Bank Nifty, the 40-day exponential moving average becomes important. For the Bank Nifty, that stands at 40,492. That should be defended in case of any downsides that we start to emerge. With the RBI policy, as we've seen so many times in the past, I mean, what happens is the first half is very lackluster. Not very much by way of action. Markets wait for what the RBI does and then the governor says in that press conference, etc. And then, we've seen many times the decisive moves start to emerge. I think after yesterday's move, the expectation is that the rally does not get punctured, but I think we'll be wiser post the RBI press conference and the decision, which is, less than 2 hours away now. Sonia.
Oh, absolutely. We won't have to wait too long, right?
Yeah.
2 hours, and then we'll know what's on the RBI's mind. The market has already gained so much ground. The Nifty is now up, 600 points from the March lows that we saw, right, of 16,950. So my sense is that once the RBI policy is out of the way, perhaps the market could resume its uptrend. In that context, as Prashant was pointing out, a 25 basis points rate hike is given. What I'm keen to know is whether this is the end of the rate tightening cycle. And if that is the case, then perhaps the market would treat that positively. So the tone is very crucial, whether they move from that withdrawal of accommodation to neutral. Now, as we know, there are several factors which are leading to this rate hike today. And of course, Lata will talk more about that, whether it's steady growth, higher inflation, a stronger labor market, etc. But for our own markets, once this event is out of the way, all eyes will once again be on the index. And in that context, the global cues were a bit mixed. The Dow was up yesterday, but the Nasdaq was under pressure. It was down 1%. So we'll keep our eye out on that. There's a long weekend coming up as well. The Nifty closed above the 200-day moving average yesterday. So now the trend is on the upside. Can we build on to more gains after the 600-point gains under our belt? That's the big question. There was large buying from FIs once again in the cash markets yesterday. And the trend from the foreign investors is positive. So it's been 5 straight days of FI buying. Almost 4,300 crores has come in. So looks like we have big cues like the Q4 earnings as well that come through from the 12th of April with TCS kicking off. So looks like the market is in a good mood, just waiting for the RBI policy to move out of the way, perhaps to resume the uptrend.
Well, that's right, Sonia. And what about the FIs? We haven't heard that net sell number in quite a few sessions. I think the last time they sold was on the 27th of March. Yesterday was a very, very good session. The Nifty went higher, conquered the 200 as well as the 50 DMA, which is nearer to the Nifty where it closed yesterday. The Nifty Bank, it underperformed yesterday, but it's going to take center stage today based on what the RBI governor has to say. Now, the street is not factoring in any kind of hawkishness coming in from the RBI governor, so just take that note, going by the positioning. Now, yesterday, I said it was a short covering bounce. So you look at the market on the whole, both on the Nifty and the Nifty Bank, there was a short covering bounce that played out, and this is the second session running. But on Monday, the FIs didn't participate in terms of short covering. Yesterday, there was big short covering seen from the FIs itself. So they covered close to 25,000 short contracts. They added 6,000 long contracts. So the delta was nearly around 32,000 contracts in terms of a movement out there. And now the NSE, they give you the breakup between Nifty as well as Nifty Bank just for the last 1 month or so. So the short covering took place on the Nifty, not on the Nifty Bank. That's telling you that the FIs are holding on to the short positions in the Nifty Bank itself. But the overall short positioning on index futures, a week or so ago when we started off the series, it was at around 91, 92%. That's come down to around 83%. So they're still net short, but some part of that short covering bounce has played out. What's encouraging is they're covering shorts and also they're writing puts, telling you that this base for the market seems to have moved up a little bit. So let's focus on a couple of strikes. 17,500 put, 17,400 put, big open risk built up being seen out there. So the level that you get out there is the support zone is around 17,450 going by the options data. And the 200 DMA is pattern line at around 17,500. I'm not talking about the 20 DMA because in the near term, you want to protect that zone. On the Nifty Bank, the 41,000 put, very, very active. The premium came down to around 150. The average was around 300 rupees or thereabouts out there. So the crucial mark to hold on the downside is the 50 DMA. You want a pleasant surprise coming from the RBI governor, and you want the Nifty Bank to move to around the 100 DMA. So Nifty Bank crucial today. SGX Nifty suggests a bit of a downtake. The uptrend is intact as long as we hold on to that 17,450 to around 17,500 zone on a closing basis.
Okay, but the monetary policy announcement is only a couple of hours away. Our poll has showed majority in the market expect a hike. Lata is sitting right here to tell us what one can expect this time around. Lata, could it be the end of the rate hiking cycle?
This one can go either ways. You can as much justify a hike as you can justify a pause. So I think the market's base case is what everyone would take. After all, the previous inflation did disappoint, was higher than what the market was expecting, much higher than what the Reserve Bank had forecast. So the expectation is for a rate hike. Now, you can as much justify a pause because what if the growth falls off like a cliff in the US, what if there is another banking shudder? Then this may look a little excessive, going on to 675. As well, you have to very much watch for what the inflation forecast will be. Just as we grumble that the Jan-Feb inflation, especially the Feb inflation, disappointed on the upside, that means it will have a year-on-year base effect. And the Q4, which they have now forecasted 5.6, may have to be brought down to 5.2, simply because of the base. In that case, at 6.5 repo, you are a good 130 basis higher than the 1 year ahead inflation. So you can equally justify that you don't have to hike at this point in time, and that's why the stance becomes important. The market is moving with a dovish hike or a hawkish pause. If they are going to hike, they will say, like, hereafter we should pause and see what the data says. So they'll change the stance and try and indicate that the next hike may not come. Or they will pause hereafter in some way. They may not say neutral, but they may say something to that effect. On the other hand, if they pause, they will say we are not done, but at the moment we think we can wait and watch. So either ways, it will be, they will counterbalance. Now, what all this means to the market? The market will watch out also, by the way, for the monetary policy report. This is a half-yearly filing from the Reserve Bank, comes in April and October. Now, that gives you a forecast of 1 year ahead. So you will get Q1 FY24 inflation forecast, and that's why that report will also be important, because it gives some indication of if that is, going towards 5 or below, then the Reserve Bank definitely will go with this as the last hike. That report will be important. All told, for the bond market, it's already built in a rate hike. So if it doesn't come, if there is a pause, then you must expect the market to be elated. For the stock markets, it's, I think, all of an hour's job. If there is a hike, maybe there is a momentary unhappiness over the Nifty Bank. And if that is not there, then those shorts that the FIs are sitting with in Nifty Bank could well be covered. So either ways, I don't think there's bad news for the stock markets at all.
25 is being priced, right?
25 is priced definitely by the bond market.
Yeah.
So there will be a bit of a rally. You will see from 7.28, where the 10-year closed, you will see it come down to 7.2 if there is a pause. And, the shorter-term paper, you will see a much better rally. 5-year paper and all, you see the yields fall a little more, maybe even by 15, 20 basis points. Finally, the bond markets will look out for liquidity, because already liquidity is just about balanced. When the government spends, there is surplus, but otherwise it does go into deficit, and the banks are borrowing from the Reserve Bank. How will this massive borrowing program go? Now, the first month, because the debt mutual funds and the insurance companies have a lot of money from the tax changes, the borrowing program in April is not a problem, but as you go ahead, this is a massive borrowing program. So they will watch out for whether the RBI will help with some liquidity.
All right. Thanks a lot, Lata, for that. Well, in about little less than 2 hours, we'll get to know. But let's kickstart the show. Let's tell you what's lined up in the first half hour of the show. We'll get you updates from across the globe. Jahangir Aziz of JP Morgan will be joining in to discuss the global trade setup, what to expect from the RBI. Later, our research team will bring you CNBC TV 18's list of top 10 stocks for the day. At 8:30 a.m., we'll do a fundamental stock analysis with Dipan Mehta of Elixir Equities. But first up, on the equities front, we have Vikas Jain of CLSA, who says, after the Nifty's quick 3% rally, sentiment as per CLSA's India Bull Bear Index has recovered to neutral from extremely bearish 2 weeks ago. CLSA's India-focused portfolio outperformed the Nifty by 4.5 percentage points, marking a 9th quarter of an outperformance and beating the Nifty by 61 percentage points since inception. They prefer banks, energy, property, insurance and materials, and are underweight on IT and consumption, ex-autos and healthcare.
Okay, just get you some money market views as well. Parul Mithil Sinha of Standard Chartered says the USD INR has seen downward pressure last week on dollar weakness. She expects the pair to trade in a range of between 81.6 to 82.3 to a dollar next week, with a focus on key US economic data to provide direction to the dollar. She says she will also keep a close watch on any further up move in oil prices. Parul says the down move in USD INR may be gradual on US dollar purchases by PSU banks.
Okay, and on the bonds, Parul says domestic yields saw downward pressure tracking global rates and amid slight positioning ahead of the RBI policy. She expects a 25 basis points rate hike with balanced guidance and unchanged stance. She expects the 10-year benchmark bond yield to continue to trade in a range of 7.2 to 7.4% for the week.
Well, we have a lot of stock-specific action to track for you, and we'll get to that just to be a bit in our special top 10 segment, we're looking at Tata Steel, Chola Investment and Financial, Equitas SFB, Ujjivan SFB, you have Avenue Supermarts, Hero Motorcorp, TTK Health, as well as Dalmia Bharat Sugar. They are stocks on the back of positive news flow, while on the flip side, you have Nykaa and IEX. Both of them could be reacting to negative news flow.
Okay.